Today we're going to do the second part of Chapter 16, Preparing a Statement of Stockholders' Equity. Our learning objective for this lesson is to prepare a statement of stockholders' equity for a business organized as a corporation. A financial statement that shows changes in a corporation's ownership for the fiscal period is called a statement of stockholders' equity. When you're creating a statement of stockholders' equity, the first thing that you need to do is you need to write the heading. The heading is three parts. It's going to be the name of the company, the statement name, in this case statement of stockholders' equity, and then the fiscal period. So you'll have year ended December 31st, and then 20, and then the dash for whatever the current year is. Once you write the heading, this is going to be capital stock is our first account. And then we're going to write on the next line the par value of the stock. So what's par value? Par value is a value assigned to a share of stock and printed on the stock certificate. When issuing stocks, a corporation can assign any par value allowed by law in the state in which it incorporates. This is what the initial part of the stockholders' equity statement will look like. So you've got the beginning, the heading, the capital stock section with the stock and the par value. You have the stock at the beginning of the year, you have the total stock issued, and then you have the stock issued during the year. Retained earnings section, this is going to be how much money the company has made. We're going to have the retained earnings section. Then we're going to write the beginning balance of retained earnings. On 3, we're going to write the net income after federal income taxes. On 4, we're going to write the amount of the dividends, and this is going to come from the adjusted trial balance. On 5, we're going to subtract the dividends from the net income after income taxes. This is going to calculate the increase in retained earnings. That amount is going to go in the second amount column. On 6, we're going to add the beginning balance of retained earnings and the increase in retained earnings. This is going to calculate the ending balance. We're going to write that amount in the third column. On 7, we're going to add the ending amounts of capital stock and retained earnings. This will calculate the amount of the total stockholders' equity, and this is going to go in the third column, and that's number 7. So what financial information does a statement of stockholders' equity report? It shows the changes in the corporation's ownership over a fiscal year. What are the two major sections? The capital stock and the retained earnings. Where is the information found to prepare the capital stock section? It's in the capital stock. It's going to be under the general ledger account. Where's the beginning balance? The retained earnings amount on the unadjusted trial balance. When issuing shares of stock, what par value can a corporation assign? That's going to depend on the laws in which the state is incorporated. Where is the net income after federal income taxes found? That's going to be on the income statement. Let's go ahead and go into our application. First step of today's work together is they want us to find what are the major things that we need in order to create and prepare this statement. So the amounts for the capital stock section are obtained from which one of these resources? The correct answer would be our general ledger. The amounts for the retained earnings are going to come from 2 places. It's going to come from the adjusted trial balance and the income statement. Lastly, which of the following will increase retained earnings? This is going to be net income. Creating the statement. Remember that the first thing we need to do is the title. So we're going to go ahead and fill in the name of the corporation, the name of the statement that we are creating, and the date. So we're going to use the trial balance and income statement for Superior Corporation. So the company is Superior Corporation. This is the statement of stockholders' equity for year ended December 31st, 20 --. The first portion that we're going to complete is the capital stock. The par value that's provided for us is $10. And on January 1st, the company issued 8,000 shares. To calculate the value, we're going to take the 8,000 times 10. That's an easy calculation. We're just going to add a 0. So this is 80,000. During the course of the year, 250 additional shares were issued. Again, since this is a $10 par value, we multiply by 10, we're adding a 0. This is going to give us a value of 2,500. The balance at the end of the year, December 31st, is 8,250. We combined the beginning balance and the shares sold through the year to get this value. The total is going to be the total of the $2 amounts. So 80,000 and 2,500 is going to give us 82,500. That is section 1. Now we're going to go on to section 2. We're going to do the retained earnings. Again, we're going to look at our balance on January 1st. On January 1st, we had $15,283.40. Now this is our net income after federal, which is going to come from our ledger, $73,148.80. We're going to subtract, so we're going to less the dividends. The dividends that were declared were $12,000. And this is going to give us a net increase. And with these two values, I subtract, and I get $61,148.80. We're almost done. The balance at the end of the year, so December 31st, 2000, is going to be the addition of the 61,000 and the 15,000. So you have your beginning balance and your net increase, and this is going to give us $76,432.20. To figure out the total stockholders' equity at the end of the year, so December 31st, 2000, we're going to combine the capital stock with the retained earnings. And once you add those two values, we have $158,932.20. And this completes the statement of stockholders' equity.